Hello, everybody. It's been a couple of weeks. Lots and lots have happened. We're gonna get through this as quick as possible. There's a lot to say, and I don't want to like stick on it and talk a lot about it, unfortunately. I honestly don't even know where to start. The S&P and the VIX are literally the two biggest things that happened. Zelensky's talking to Congress at 9 a.m. That's a big thing. Fed Day today, which when they raise rates, it should be an algorithmic trigger. If I had to guess what happens, I think that I don't know actually where we go on the first pop at 2 p.m., but I think thereafter at 2:30 when he starts talking, he's going to calm the markets and it's going to crush the dollar and it's going to make the markets to pop. And I think we're going to break this. So the thing that happened, the biggest thing that happened was VIX newsfeed. Like we said, it was bullish from February 4th. It literally created a huge just up and to the right coil saying go long the VIX. It was an algorithmic trigger and we needed one. We were saying literally for this entire region about here, 28th, once it had this blow off move and it came back down, this looked and felt like a residual move, kind of like a last ditch stabilizer type of move. And it just wasn't breaking down. It just wasn't breaking down. It was impossibly bullish. And then some weird glitch happened here. Where was it? This little boop, it just kind of spiked up. The market didn't actually sell off. The VIX actually spiked. And that's a result of it bouncing off of the trend line. This is the type of behavior that happens on the VIX. I'm sure like we can have a trend line over here. Like this is what happens when the VIX breaks trend lines or bounces off trend lines and it isn't bullish, for example. So like it glitch traded up and then it instantly went back up, touched it, and then failed. And then we came up to here, retested it exactly to the penny, and then failed again. But the difference between this move and this move was that the newsfeed came out. So the thing about it is that we needed a newsfeed, and it didn't even matter if it's a bullish VIX newsfeed saying the market's bearish, the VIX is bullish, which this literally does, saying the VIX, someone bought 80,000 VIX contracts into June expiry and sold the 21 puts into the June expiry. So someone's saying that it's going to close above 21 by June, and it's possible that we have a very big volatility event by June. That could be either or in terms of a contrarian type of setup where it either happened. I know it's weird to say, but you figure this out in the next 3 months as it's happening on the patterns and everything that it's doing, and you can figure out what it actually is going to do, because this could also be a contrarian thing where everyone psychologically and liquidity wise and technically wise think that we're going to have this big drop by June, and if it doesn't happen by June, everyone takes a big sigh of relief. And it's very, very possible that this rally, I think it's going to last 3 to 6 months. And so if we do pass that 3-month period into June, this is where everyone's going to take a big sigh of relief and no one's going to think that we're going to have market correction. And in fact, we're going to have a very violent correction. I still think we'll get the violent correction this year and then the bear market next year. I would put my everything on the line saying that we'd have a bear market next year, a recession next year, not this year. Everyone who's saying we're in a bear market, shut the fuck up. Literally, shut the fuck up. Okay? This is not a bear market. This is not a bear market. Okay? This is not a bear market. It's literally a joke. It's insane. If you want to say under the surface, like 50% of the NASDAQ is down 50%, okay, sure. I agree with you. You're right. But that is not the definition of bear markets. That is not the practical purpose of a bear market or recession. These are bear markets. They take years to work out and they take years to come out of. Okay? This is not that. Okay, we're not in a 2-year downtrend. Okay, this is 2 fucking months. Okay, 2 months, and we're not in a downtrend where we're going to drop for 2 years and take 3 years to come out of. Okay, it's pure stupidity. I don't even care if you're professional or been in the game for forever. You're an idiot. You don't say that. If you want to say it because there's a lot of stocks that got sold off, there's definitely an overextension to the downside in almost the entire stock market. It's disgusting. It's brutal. It didn't make sense. And it does make sense because sometime later on in the future, it will make sense in terms of the wave patterns. This to me looks like, I've been saying it, a wave 4 of 3, wave 4 of 3 of 3, wave 5, and then a wave 4. It breaks this low and reverses. And so it broke it here, touched, and now we're kind of getting consolidated out right here. The thing about this is I don't think we're done with the volatility. Even if we get a relief rally here, I would expect to see some sort of retest of this. So if we break out and everyone's like, yeah, it's a relief rally, we expected this, blah, 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 and then we roll over again and we kind of have a very violent drop, in like 2 or 3 day drop or something like that. Everyone's like, oh, we're in a bear market. Oh, I told you nothing changed. I see something like that possibly happening. We got the death cross here that people are saying that it's, oh my God, it's a death cross. We're going to bear market. When you have things like this, when you have a violent drop below the 200-day moving average in a straight line without consolidation, this cross tends to be a contrarian move where it's a short-term bottom. And lo and behold, the VIX newsfeed came out exactly on this day. And what happened exactly when it came out? It came out right here at 5 p.m. And then this happens. So it's very, very, very specific. And it's the first time it's breaking this downtrend. Every single time we spiked, we got smacked back down. So the first time we're breaking it, we even got this little glitch trade, smacked back down, and now we're breaking it. Calmly, quietly. I could probably see that us filling the gap today on the Fed. So where are we at? 429.8. So we're right on the daily middle Bollinger. I could see us selling off, filling the gap, and coming back up. Keeps the bears in check, you know? So that's that. And it's just insane is that we needed a news feed. It didn't matter even if it's a bullish news feed. It's because the VIX news feed and algo was bullish. You needed a trigger to get rid of it. Simple as that. And even if you got a bullish VIX news algo change, it doesn't change. It doesn't make the VIX more bullish. It doesn't make it more bullish. You just need a trigger. This was the previous support right here. Right here. Actually, where was it? This is a huge line in the sand, so to speak. They kept trying to break it, and then you get the news feed, and here we are. We broke it for the first time since January 28th. Well, I guess I would say over here. But you can see it's very, very specific. So this is the line in the sand, 30.1 on the VIX. There's other things, other patterns and stuff we talk about. The option candles usually have violent drops. All last year we had violent drops into the option expirations. Violent drop, violent drop, violent drop. And then it started to reverse after we actually broke the uptrend. Started to reverse and then we exploded into it, right? And then we're started again this year. Violent drop into the expiration. Violent drop into the expiration. And then here we are. And so what we end up getting, we got the breakdown of this head and shoulders pattern that the VIX went from 31 to 37. That is not what the VIX would have done if this was a true breakdown. The VIX would have been over 45, over 50. And instead it went from 31 to 37. Didn't make sense. Felt more of a bottom. Way more of a bottom. This was the VIX swell we talked about. So it felt like it was definitely a bottom. And it's perfect. Wave 1, wave 2. Really toxic, but that's just the name of the game. It's pricing in future volatility. What I wanted to talk about quickly was the VIX, VXX, this thing. This was actually where I wanted to see. Probably not this high. Either this, 32, or 37. It went up all the way literally to 40. It literally filled the gap from May, which started all of this volatility. This was behaving extremely bullishly yesterday. It did this when UVXY literally didn't even move. UVXY was red, and this went up 42%. Do you know what kind of weird divergence that is? It's insane. And they spoke about during the day that the ETN halted production of shares, and then the shorts got screwed, and then you had a short squeeze and some weird effect like that. They always try to have a reason as to why moves like this happen, and we were literally waiting for some sort of a violent blow off move, which would be a fake breakdown. And it literally did it. So we were saying like this looks and feels like a fake move. The market is literally going up while this was exploding. This is the type of moves that happen at bottoms in markets and tops in VIX patterns. You get this flush because the momentum was already here. And I try to explain it. The momentum was already in. This movement wasn't, it didn't push up this day. It was just the residual momentum of all of this coil right here. And it already released it from here this day, the 24th, which is the exact reason why it could finish red on the day and make this move itself in the same day. This is the most sensitive to VIX movement. UVXY should be, but it's a different like dynamic. So if you look at UVXY was going down and up while the market was going with it this whole time. It was this weird effect where, let's see, the 9th. So we had the massive update, the strongest day since June, okay? That's a very, very specific kind of day. That's a very, very specific kind of headline that you would see. And I think that it is what happened in June 2020. All of the meme stocks and penny stocks and stocks like that were exploding in the first 6 months of the move. And it makes sense because if you get a start of a wave 5, you should get a similar wave structure as wave 1 in terms of which stocks move with it. And it makes sense that at the very start of the bottom of wave 5, you would get a move like that and a headline like that. And lo and behold, we got an algo trigger right after that. All the gaps are filled. And we got an algo trigger right exactly, literally when we needed it. This needed to hold, and we got the trigger. So everything is kind of in place for this rally. The only thing about it is I don't think we can rally out really cleanly because we're not on the zero line yet on the weekly. See right here, 2.75, 1.4. If we close exactly where we are right now at 426, but we're at 430 right now. If we close right here, this doesn't touch the zero line next week. And why does it have to touch the zero line? It doesn't have to, but it's really good if it does because it represents a very clean and healthy wave. It means that it's not going up until it meets neutral momentum. And that's a very healthy thing. And if it doesn't happen, it's generally not good later on. So maybe it doesn't, and we just rally out, and then we still get that correction in 3 to 6 months. I expect a very violent correction, and I expect there to be a very violent move to the upside through all-time highs before that correction happens. So if you're scared for it and oh my god, whatever, it should be fine, and everything should rally violently. The memes, the penny stocks, all stocks. Chinese stocks got annihilated. Everything got absolutely obliterated. So we'll get the relief rally and everything. So it's important to know. So will we rally? I think we do, but this needs to get closer to the zero line. And in order to do that, this can't do this in 2 weeks. That can't happen. Or if it does, it needs to get hard hit. There needs to be a violent drop somewhere within the next month or so. Maybe a retest of this, so like kind of retests the trend and then holds, something like that. So we're not out of the woods completely yet, but as of right now, this looks like it's going to rally out. We got the VIX trigger, and as soon as we get it the first time in over a month, and we break the downtrend, you understand, right? And we talked about how violently bullish this was, and it just couldn't go because of the VIX algo. It just couldn't go, and that's how algos work. It literally defines the trend of the market. It's insane. It's insane how violent these spikes are on good news, on relief rallies, and it just can't go. It's crazy. It literally will define the stock market and how it moves. You'd think it'd be impossible. It's not. And I don't know why it happens or how it happens, but it's just, that's the way it is. It's crazy. And no, it's absolutely bonkers. Is this a glitch trade? Okay, so this is probably going back down to here today, 426.9. Is that flat on the day? Almost. That's the top of the yesterday. So I would expect to see at least that today. And however it plays out, Fed days are always the hardest. We got a MACD cross happening right here. Like, this is a massive coil. This is like the way this looks. It wants to go lower, but it can't. It's like it fell off. It's like it just fell out of the sky, and there's this coil that refuses to let it crack. That's what this looks like. So every time it gets to this level, it bounces up, but it doesn't continue. So you get this huge coil effect. So what ends up happening is that the move that ends up coming out of this should be a relentless rally through and through. This wave 5 coming, relentless, that ends in a blow off top. And then once that blow off top happens, you end up getting the release of this. This is how waves work. So you'll end up getting the release of all this negative vomit type of movement. And yes, you'll go from like SPY 500 plus down, back down to here. Literally. So you'll get like a 20% correction in like 2 weeks. Something like that is what I would expect in 3 to 6 months. And we'll worry about that then. We'll worry about this now, you know. I made this longer than I wanted to. So again, I wanted to talk about the UVXY and S&P thing, is that when UVXY trails positively and the VIX trails positively, it's very, very, very hard for UVXY to do this. It is very hard. I find me a time in history where UVXY just went up in a perfect up and to the right pattern for over a month. I don't think you can find it. This is very rare. It's a very unique type of pattern. And I think it's stabilizing the momentum in the market right here. So March 9th, we had that gigantic up day, like 2.5%, 3%, whatever. And UVXY went from 22 to 20.5. It barely moved. You would have expected this trend to break, right? And so what was that effect? What ends up happening is that if you have a huge down move, right? When this is truly down, UVXY is truly up and to the right or even more steep. But if you start rounding, instead of getting up and to the right in UVXY, you start rounding, there gets this compression effect where it's like a U. It's like it's catching the momentum, so it's not down and it's not up. It's like a U. So you end up not really moving yet because it's waiting for a trigger, and lo and behold, we're waiting for the Fed. Or the news feed that came out after it broke the uptrend, retested, and then a news feed comes out that night, right? And then this happens. And then you get this glitch trade at the close at 18.99 right here for no reason. So it's doing this compression effect, which is a tell for the market bottoming. It's showing you that the market is coiling its momentum, and the effect that it's having is a delayed compression of massive momentum. That's the best way to say it. It's a delayed compression of massive momentum. So the next impulse wave is the true direction of the trend in the short term. So big momentum here in the market. And I'm expecting us to go to all-time highs this year. A wave 5, 3 to 6 month time period, and we'll take it from there. It could get a little dicey, but as long as that newsfeed on the VIX stays put, we should be all right for now. All right. GG. Go look out there and stay long. Buy your stocks. Peace.